Let's kick off with one of the biggest news items coming through from Ghana, Fan Milk releasing its results. And looking at those first half results, I mean, 40.6% year-on-year growth in revenue, earnings per share up by around 30%. I mean, those are strong numbers coming off, I suppose, what was not a good year last year.
Yes, like you rightly said, the company released a strong set of numbers, which saw revenues grow by about 40% from 52 million in the second quarter of last year to 73.3 million for the second quarter of 2012. Turnover has positively been impacted by the growth in sales volumes and the upward adjustment of between 16 and 25% in product prices, which happened in the first quarter. The impressive growth in volumes have been aided by the improvement to the company's distribution network. Fan Milk in 2011 embarked on a number of expansion projects, which included the completion of a new regional distribution center in Kumasi, new sales tracks, haulage vehicles, bicycles for their vendors and freezers. And these CAPEX projects, which totaled a little over 20 million last year, have sought to increase the production and distribution capacity of the company, which have positively impacted top-line growth.
Yeah. Let's quickly take a look at the currency, because the finance minister coming out saying that the budget is going to increase this year. Of course, that would have an inflationary effect and would increase the deficit beyond the IMF target, which is set at around 5.2%. What implications does this now have for a currency which is already very weak? Okay,
no doubt these are very challenging times for Ghana's economy, and we at Ecobank Capital have always been of the opinion that the government was going to face difficulties in meeting its monetary and policy objectives this election year. And as it is characteristic of run-up to elections in Ghana, large fiscal slippages tend to offset policy targets and result in wide variances for both fiscal and monetary targets. Yes, year to date, there's been a currency depreciation of about 20% of the Ghana cedi against the US dollar, and there still continues to be lots of pressure on the cedi as a result of the persistent demand for US dollars by local firms hungry for imports to fuel the growing economy. And this, no doubt, will result in further depreciation of the cedi in the weeks and months ahead.
Very quickly, Manchester United planning an IPO in the United States, and of course we know that the Heart of Oaks, the club, is planning an IPO next year. Is there appetite for a soccer club right now to invest in a club in Ghana? Is this going to appeal to investors?
No, well, Heart of Oak is a team which I've been an ardent supporter of since I was a child, and this is a company which raised $2 million from an IPO last year. The club then wanted to raise about 10 million Ghana cedis. The shares, which was subscribed to last year, are currently traded over the market. And the listing on the Ghana Stock Exchange next year is basically to make it easier for those who want to exit their investment, as well as for those who want to purchase the club shares. From the grapevine, I hear there could be attempts to raise funds, but there have always been questions about the future profitability of the club. And should there be another attempt to raise funds, I do not see the appetite as being any different from that of last year. And those who will subscribe to any shares will, to a large extent, do so primarily based on sentiment and not for money making.
So voting with hearts as opposed to heads perhaps is what we might see, but we'll wait to get some more details on that. Thank you so much for joining us, Kisseih Antonio, joining us on the line there from Accra.